is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I hope you're on a good Friday and looking forward to the July 4th weekend. Man, I sure am. Ooh, need a break after a 100-point rally in 3 days on the S&Ps. It's pretty vicious. Hope you guys were long. I actually wasn't convinced that we weren't going to settle down here and kind of spin around and consolidate while these guys thought about what exactly was on the horizon or is on the horizon. Got stopped out a couple of times on the way up, but that's the way it goes. Been looking at other products, as we all should be doing. We're going to take a look at gold really quick this morning. This is an interesting setup. We had that, kind of spin around, not a lot to hang on to after we spiked up that consolidation. Now we've got a new profile this morning, which was predicated by that peel back, as you see in the scanner on the gold on the August contract. We've reached the top of this profile, knew the profile ahead of time, came in late last night, early this morning, up to 1341. We've reached a high of, 1340.6. We've reached a high of 1340.9. And we're about backing off at 1337. This is, again, it's more of a trading opportunity on the short, ultra short term. I'm not exactly excited about being short gold right now. But if you look at this, that 1340.6, man, I feel retarded this morning. We've hit it. That's the unfair high on the daily, the new profile. That's a big number right there. That was actually a kind of a number from before. And this is our 240 graph again. But, what do you do with this? If you're up a couple hours ago, actually more than a couple hours ago, that was a little bit of an opportunity for just a contra trade against the long-term trend up now. But I think what you're waiting for really is to get a close above 1340.41. And then I think you can use that to play defense on the long side. Again, I'm not exactly excited about being short this thing. And I think another shoe is going to drop. There's going to be some more fundamental announcements coming out of Europe. Again, what's the value of the euro? The pound has gotten smeared. These are all things you guys already know. Let me check the den here really quick. Wow. That's a long post, JB. You ever heard of War and Peace? That's a lot to read there. Here we go. So as we look at gold, referencing gold and going back into, and we're going to take a look at a couple of currencies here. I'm a little miffed. This has been a nice, kind of relativity trade going on here, and I'm going to show you why. I've been relatively bearish on the euro. We're kind of moving up again here, but you look at some of the correlations of what the euro does, and sometimes some of the other products. You look at gold, look at the U.S. stock market, look at the U.S. dollar. We talked about the dollar bouncing yesterday off of those unfair lows, or unfair highs on the. And let me go back to the dollar really quick. I can get my screens coordinated here. Talked about being able to buy a little bit of a bounce off of that 95 and some change down there. The 95 and change is 95.76. So got a nice little pop yesterday off of that area. As you can see, we're settling back. But to me, and again, we're talking about a relativity trade with some other things other than the dollar involving the euro. But there's the low yesterday of 95.52. So within the noise level, we talk about a noise level within the profile and for highs and for lows all the time of 10% of the height of the profile. So when we back up into that after we spiked up and we see that, there's an unfair high there on the weekly, we can lean against it, we can play defense there. We got a decent little pop there. I mean, that was 100 points on the dollar, but we're settling back. I still don't think that, this is out of whack with consolidation in a flag type pennant situation to move higher on the dollar. And in the face of a couple of things going on, in the face of, oh my God, the sky's not falling, everything's going to be cool in Europe, and we're going to have no currency wars and no more people leaving the European Union, and we're just going to carry on printing money in every country in the world. God, how about Brazil in this Olympics thing? We're going to get into that in a little bit. But the euro, to me, still is in that sell-off, kind of an inverse relationship with the dollar, and consolidating around here to possibly make another leg down. And again, it's hard to time those types of trades. But, we talked about a long-term position short with an in-the-money call hedge and just kind of waiting it out. I personally didn't take off anything yesterday as we kind of had, moved down, because I'm looking for a much bigger move on this thing. So right now it's just kind of a wait and see. I personally got the hedge on right now for the euro. Let me see here. JB, no need to apologize. That was a long post, though, man. I got to tell you. That's the longest post, I think. We're not trying to break records here, but that may be the longest post I've ever seen in the den. That's the record so far, guys. Anyway, yeah, Brazil. How about that? Man, could they have picked a worse situation to host the Olympics? A severed foot just showed up on the beach today where they're supposed to play the beach volleyball competition. I'm sorry I'm laughing about that, but somebody's foot's no longer with them. But it is just amazing. I mean, the country is, for decades, not had some kind of massive economic problem. Massive economic problem, than they're having right now. I've got a friend down there he was a foreign exchange student here back in the 80s. Wealthy family. His father's gotten kidnapped 3 times in the past year. That's pretty amazing. And he's just like, man, we're throwing in the towel. We got to get the heck out of here. So a lot of problems down there. Let's have the Olympics in the most problematic city on the planet right now. Interesting. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I was just reading something. I can't say it. It was about Brazil. We're going to pass. We'll do it in the den later. I don't know how many or who's watching or listening to this show. Anyway, might be Brazilian. Here we go. All right, so took a look at the euro. Again, this is the long-term trade. Hard to time these things when they're going to come apart at the seams. The yen trade was kind of a nice pop, but we're still not to the targets up top there. And again, the dollar coming off a little bit this morning, a little bit of consideration for this thing. But again, here's where the yen is. Here's that 101.33. I think you can play defense on the long-term trade. You've got that 105.50 general area still sitting there. Here's the 240s. Got a little bit of help this morning on the short-term day trade where the dollar is on support also. The Australian dollar, just to hit the currencies here, not a big fan of shorting this. We're kind of crowding back up into above that unfair low, that 74.81, big number, still is. Weekly close above there. I think we can have game on again, finally, in the Aussie dollar. You guys are probably tired of hearing about the Aussie dollar. Let's go to the pound here. So, I know you guys read the news. They're probably going to do some, what's the word they always use? Not innovative measures. Is it innovative measures? Is that the new word? Disruptive measures. Is that what I should use there? On the pound, flood it, liquidity, blah, 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 the whole 9 yards, which is obviously going to devalue the currency. So they started that rhetoric yesterday after we were kind of trying to consolidate here. So here's the big numbers on the pound right now. All right, so the big numbers, 133.10 on the bottom, 136.88 on the top. And right now we're consolidating below 133.10. So when you have something like this, just like that kind of classical flag pennant situation, I don't see anything different here. We're not forming a bottom. I'm not a big fan of this double bottom, triple bottom thing when it's kind of consolidating, compressing down. That usually means we're going to have another whoosh sound pretty soon. And right now you can play defense against 133.10 on this. All righty. Get my charts up here. Where are they? All right, so yesterday, I want to go back to the grains really quick because we had that big grain report. We talked about that one. This isn't a really interesting situation. So right before the report, I actually played around with this. I usually don't do that. I put stops in just because they usually yank this thing the wrong way before they run it up the right way, and that's what happened yesterday. We were kind of consolidating down here around $11 a bushel before the report. So I was thinking, okay, well, you know what? We can put a stop in down here just in case. And you know, if John from Philadelphia wants to call in today, I'd really love that, because that report to me still is kind of a stocks related report. Really, you know, all things considered, I thought could have been considered bearish, but you know, maybe I didn't read it right. I was just kind of gazing through it later. But again, anyway, the technical situation here, we talked about 1190 or 1095 up into 1149.50, and that was going to be some resistance here. We're, you know, getting a daily close back in here. I think we're just going to probably settle back, but that's my just general thoughts on it. But we reached a low yesterday of 1092 is the way I see it on November beans. I thought we reached a little lower than that on that pullback, but so I think we were trading about 11 when the report came out. It yanked down, got some stops. It was funny to watch that, and then man, in a couple of minutes was up at 1140.50 in that general area. So nice little trade there. Really good risk reward. But alternatively, taking a look at December corn, and again, if John from Philadelphia is listening, I would love for him to call in and talk about this. Just, you know, talk to my guys at the elevator after this report came out. Don't see a lot of hope here, and the weather's good. Stocks are high. Yes, John from Philadelphia. Yes. I see you in the den. If you want to call in, that'd be great to talk about these things, because I would assume you, above all others, have read every word of that. Sounds good. 8:40. He's going to be calling in. Okay, that's about another 15 minutes. That's awesome. All right, let's take a look at the notes. This has been the easy trade. I hate to say any trade's easy, because it is what it is. At the time, you haven't a lot of times uncovered something that somebody else has seen. But the relationship here, I actually bought some. I bought some late around 132.20 yesterday. I got up not as early as I wanted to, but saw that we had kind of come down and gotten down into this inflection point. And I didn't see that coming, even with the market going higher, the stock market. I didn't see that type of a rally, but I actually took some off probably too early. But you know, talking about an easier trade, I mean, when you have this type of formation and you have support here, and the market's climbed 100 points since this day, you know, the writing could be said to be right on the wall here to not short this whatsoever. And we've been looking at it that way and trying to catch a bid. And you got to ring the register last night if you were in this thing based on yesterday's action at the same time. So, man, what a nice, easy, calming trade, which is not always available. Did I say that right? So, and the good news is, I failed to mention a while ago, you've got a profile appearing below price action, well below price action, which is also putting another bullish connotation onto the trade itself. So, you know, where does this thing go from here? Believe it or not, you've had the run up and you're back on 240 support now, short-term support 133.14. You know, some of these global rates are insane. This is going to ultimately cause inflation, in my opinion. Crude, right near the close yesterday of the pit contract, just had everybody falling out of bed action here. You got support 47.71. That's where we talked about trying to play this again from the long side. And I'm going to stick by that one. Let's hit the NASDAQ really quick before we go to break. This thing's been, good Lord, what is this? 41.50 up into 44 and some change. I haven't been playing this, thank God. But right now, here's the new inflection points, 43.63, 44.61. These are all in the scanner. Guys, we're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market safe currency comeback CD. This indexed and US dollar denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Going to hit silver really quick. Talked about support now. 1806. Man, impressive move finally in silver. I know Larry's happy. Larry, I hope you're happy. Larry, I always hope you're happy. 1925, last print. Let's see. Did you guys hear about that Tesla? I guess you saw the stock action. I mean, you knew that was going to happen. I hate it for, I had a death actually, you know. Did you read the explanation of what happened with that Tesla so-called the drive without driving piece that they have on the Tesla car? Did you hear how that went down? Anybody read about that? I'm sorry, I'm not laughing. So they've got this thing in there that reads, overhanging signs on top of the driver-assisted cars. I didn't hear what Tom said about that. Somebody's saying he had a little piece on that yesterday. Man, you knew that something like that was going to happen. I mean, and think about the statistical sample, how small it is out there right now, and then this goes ahead and happens. If you widen the sample, which I would assume would be times millions, you got a lot of deaths. Kind of an amazing situation. So Tesla this morning ramping up just a tad here, 208. I think we had gone as low as, oh wow. Yesterday afternoon we went as low as 202.50. So there's that, breakout 202.50 support area on Tesla showing on the chart right now. Let's hit Japan really quick. So here's the Nikkei. Nothing really happening there. Just coming up into resistance again, 15,864. And let's go into this set of stocks here. I want to take a look at Goldman Sachs. I want to take a look at the XLF in a second. All right, so obviously had a little rally yesterday. The big weekly long-term pressure points are 152.26. We've kind of moved past this 145 general area that we're looking at. Now we've got a profile appearing below price action, relatively bullish. That's what stops are for, folks. I was trying to bank off of this bottom at 144.84. That didn't work. That's okay. Goldman Sachs has been very good to the short side and being able to sell resistance, as you can see there, as you can see there, as you can see there, for a while, and been the dog of the XLF, one of the dogs. But right now, I got clipped right there. That's okay. Decent track record on this one. But here's the next major selling point, 152.26 on Goldman Sachs. I hear you, Terry. Yeah. Just happened to miss an 18-wheeler coming at it full speed. Yeah, on the Tesla scene. XLF, I was a little upset at this one too. Didn't stop at our bottom at 22.49 and has powered up. Still not impressed with this whole sector. Got some headwinds ahead of us, in my opinion. I mean, with the currency unknowns that are coming out in the banking sector, that's going to start bleeding in. So, again, I think you've got better longs out there. Again, wasn't something I was exactly pumped up about when it powered through 22.5 yesterday. But, again, that's what stops are for. Let's take a look at Microsoft. All right, so 50.09, talked about that being a possible resistance the other day. Now we're back in the profile. We can't say that that's the case anymore. So, again, Microsoft kind of churning around here, has had an incredible move up for a stock this thick since Brexit. And right now, I think you've got still better longs out there, but getting back below 50, 53, and 50.09, I think we'll put this in the short camp again. And again, it's hard to time these things about when the next news is coming out on the Brexit situation, but I fully believe there's something else coming. Let's take a look at ExxonMobil. All right. So this week, big week, 90.46 is going to be support on this now. And as you look at this, here's the daily. Here's how these inflection points act. There's no reason, believe it or not, to take this trade off. You don't have any 240s kind of stopping you out. I want to pull this up. Normally you have these regulator of the trades up with the 240s. Don't see any reason to take this off right now. Taking a look at the XLE. Are we getting any prints this morning? Wow. Kind of amazing. We're up into pretty big resistance here on the XLE, though. Keep this in mind. Kind of got a big reversal here, but you got weekly for highs around 68.23, and that's coupled with 68.16 on the daily for highs. So again, crude oil kind of backing off a little bit. If you're trading the XLE, XLF, I think you can lean against that, play some defense. And also you might have some stocks that have been showing weakness that might start coming in on the XLE today, excuse me. Taking a look at, let's take a look at JP Morgan really quick. A lot of these stocks were coming up into resistance yesterday. That weekly unfair high and daily unfair low on JP Morgan didn't hold. So now you might be looking at a possible weekly close above this area. Remember, the XLF has got a little bit higher number as resistance now that that first line of defense didn't hold. So JP Morgan, kind of a wait and see now. I'm not in this stock short, but if you did short at those inflection points, I think you got to sit tight now. We're going to take a look at McDonald's. Again, a stock that I wasn't extremely happy the way it was acting. I think, you know, today you got 120.34, you got 119.67 as resistance. I really like this stock to be able to come back again, but now you've got to wait patiently until we kind of breach this 119.67 down into 119.28. Hadn't really, if you look at the action, I mean, if you can just kind of do the math really quick, we haven't really recovered since before Brexit, as well as a lot of other stocks or the market in general has acted. So not only did you have a relative weakness kind of play down here relative to what the market was doing the past 2 months, you've also got a non-happy retracement relative to Brexit back, you know, anywhere near where it was beforehand. So getting back below 119.67, I think you can put some shorts on for this particular stock. Guys, we're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. I think we've got John from Philadelphia on. John, you there?
John Logan, good morning to you.
Hey, how are you today, sir?
I'm excellent. Been very entertained by the wild swinging going on in markets the past 6 days.
Yeah. How can you not be?
John, you were talking the USDA report and the grain markets. We could talk for hours on this. I'll let you take the lead and identify what subjects you'd like to talk about.
Yeah, I mean, I wanted to get your thoughts because I know you probably read it deeper than I do, and I looked at the numbers. I mean, I'm trying to figure out how this thing rallied actually, and I'm happy that some of our numbers kind of worked well technically, but how did this thing rally? In your opinion?
Yes. No. John. There's a bull market going on in soybeans. We all know that.
Right.
Soybean prices double bottomed fourth quarter and first quarter down near $8.50, and we've surged since on a whole host of factors. The bottom line is, given demand has been stronger than expected back in January, and supplies have changed for the lower since that time, constitute the factors driving the bull. Mm-hmm. Now, coming into that report yesterday, the new crop soybean futures had fallen from 1180, 1185, and bottomed at I think it was 1075 a week ago today, and then bounced, pulled back. And if you look at it kind of in the scheme of things, yesterday's pop was really nothing other than moving back towards the higher end of the range. The key bit of data that came out that would have prompted buying vis-a-vis, the prices at Wednesday's close was the acreage number.
Okay.
The trade had been thinking that the USDA would estimate soybean planted acres would be somewhere close to 84 to 85 million acres, and that would have been an increase of 3 million acres vis-a-vis the March 30th report. And the idea the trade would have been keying off of was, hey, between March 30th and June, soybean prices had rallied a bunch, and that you would have thought given incentive to, at the margin to farmers all across the country, to plant some more soybean acres, maybe at the expense of some corn acres. That happened, but not nearly to the extent that the trade was guessing. So that is why we rallied. And what I will tell you going forward here, now at this point, price is going to be exclusively a function of weather between June 15th and August 25th. That is when the bean plant undergoes reproduction and determining the yield per acre nationally. And what I will tell you is the supply-demand balance has tightened up significantly enough such that if weather is just marginally poorer, price we're getting to the point where marginal supply changes can have outsized price impacts. So if we have good weather, we could see bean prices, I would guess, fall back towards, maybe 11, maybe 10.50, probably no lower into Labor Day. And if weather is adverse, like if it's too dry and harms reproduction on the soybean plant, which, mind you, remember, comes after corn, is just a later maturing crop. If it's adverse, too dry, basically, you could have enough yield decline to drive price, I'm guessing, up to the 13 to 14 range. So those are kind of the parameters I'm thinking about, and it is all weather dependent at this point.
Well, that's unbelievable analysis as usual. What do you think? I mean, considering that we've just kind of got up into these weekly unfair highs and the daily unfair highs on the profiles, and we're not really looking like we don't want to be there. Do you think we just now are waiting almost in a consolidating kind of pattern for the next, I guess, weather type related reports, in your opinion?
No, it's not opinion. That's exactly what it is, John.
Okay. Okay.
What I will tell you further, that it's all important for all of us involved in this market, being actual money or just looking, is to understand that speculators as a group have a huge amount of money invested now in the prospect of rising soybean price.
Right.
And so if the speculative crowd, and mind you, the speculative crowd is there to make a buck on a change in the price of the contract, not consuming it, not supplying it. And if you have weather forecasts or the actual thing that comes out and it's beneficial, you'll get selling just by that group.
It could get some wheels to it, to just from the sake of, the trade's over and quite a few people on the wrong side of the trade. Where do you think
what I will tell you, though, here we are at 11:44.
Yeah.
We're now closed until 9:30 New York when we reopen the eCBOT.
Mm-hmm.
What I will tell you, from my perspective as a trader, any dip down to the 11 to 1072 low, that was that low a week ago today,
right.
I think it was.
Yeah.
I'm buying everyone as a speculator. The reason being, the supply-demand balance is tight enough that buyers, be it U.S. consumers, be it China, and what I will tell you is the Chinese demand is off the charts. It's very surprising. It's very surprising for Chinese buyers to come and purchase U.S. beans in the May, June, July time frame. Usually they're purchasing from Brazil.
Right.
But Brazil's got nothing left. Back in December, January, February, when the Brazil real to the dollar, when the dollar real was way up at 4, and mind you, it's down to 3.20. The dollar has cratered versus the real. Or in other words, the real has popped back.
Mm-hmm.
But back when the dollar real was very high, the real was low, the Chinese were just buying everything they could out of Brazil, and Brazil is sold out. And
right.
Surprising thing, the past 4 weeks, China's been in buying U.S. beans. That is rare. That usually doesn't happen.
Right.
So on
John, we
every
gotta go
dip, the Chinese will be buying.
We got to go to break. I really appreciate you calling in today. That was awesome.
Thanks, John.
You're welcome. Thanks, John. Okay.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Just taking a look at the euro again here. I was talking to my 90-year-old mother last night, and kind of off kilter what we normally talk about. And we were talking about West Virginia. A lot of families from originally from West Virginia, and we were talking about coal miners and talking about the Hillary thing and Trump's comments and all that. And she was like, "Yeah, I remember back in the 30s, and everybody was out of work and blah blah blah." And then Roosevelt came in and provided all those jobs and got those boys back to work and kind of saved the day. And then I'm thinking, today, instead of saying, okay, we have national projects, let's put everybody to work and work on them, that shovel-ready type situation that they spoke of highly, we just give them the money. So back then, it's just an amazing, simple concept. You need to get paid, here's a job. Today you need to get paid, here's the money. I'm speechless. I mean, when did that get away from sanity? Might be called a Democrat. Here we go. Let's take a look at a couple other stocks. I'm going to go back to, Tammy, yes. And you know what? It's a great incentive plan. I mean, I grew up in a tobacco field, and it was like the last thing on the earth I ever wanted to do, again, ever. It forced me. It's called necessity is the mother of invention. So not only is it, hey, let's get something out of it, let's incentivize someone to not want to dig a ditch. That's my talk for today. Here we go. Boeing. We're going to take a look at this one. Obviously, this one's kind of range bound. I had a couple of emails about this. Is this thing ever going to move one way or the other? And with the volatility that's recently happened, I don't really know. I don't think you have a lot of leverage on this one. So, again, we've had a decent little move up, back up into weekly and for highs. But, again, I don't think those numbers mean a lot right now. So, for you guys trading Boeing, here's Disney. So had a really decent move up from the 94s into 97. Had a couple emails about this one too. Again, I think you got better ways to put cash to work right now. This is the weekly on Disney. I'm not really excited about this particular stock. I think if we get back down below 97, you got to be putting the short gas on this one. We're going to go to the bane of my existence, IBM. And, again, really nice snapback. Got some leverage off of 146 this past week. Got back in the game. You've got a profile that's edged higher. And remember, before Brexit happened, we were kind of compressing up into this area. I actually think this stock could actually go higher now. So, again, not the one to be shorting. Intel, I'm going to hit this really quick. I'm just going through a lot of the Dow stocks here that I've had questions about. This one, man, look at this thing. Unbelievable. And has really, on a relative scale, bounced back more than anything I've seen. And here's the weekly. We talked about 3084 on this one being support the other day. And that's a massive move for a stock with that type of market cap. And if you're going to look to buy strong stocks, you've got support at 3264 now. Guys, you've been great. Have a great weekend. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.